Hi everyone, this is Ron Brilliant. Welcome to the Elliott Wave Options U.S. Market Update. In these recordings, we talk about the news that affects the markets and then put it in perspective using our Elliott Wave charts. In this video, as promised, we're going to visit Dr. Copper and what the recent move in copper may be suggesting for the markets in the short term. In addition, we'll be featuring the symbols you see on your screen now. And remember, if there's a particular symbol you're interested in, you can click right on it and go to it in the chapters feature on the video. With that said, let's take a look at the charts. Hey, if you like these videos, please hit that like button, or better yet, hit subscribe, and you'll be notified immediately when one of these videos is posted. We really appreciate it. You know it helps. All right, taking a look at the market, you can see that we bounced to the upside today. We corrected a slightly overbought condition that we were in following Tuesday and moved back down right to the 50-day moving average and bounced up today. We want to look at volume on this move, and this is really constructive volume. You want to see volume that's about average or slightly above. What you don't want is one of these big volume spikes, because that tells you everyone that wanted to buy has bought. So good solid volume leads you to believe that, hey, there's likelihood that the market continues to the upside. And as a reminder, we do have this qualified zigzag pattern that gives us a target. Some are thinking that there's no way, but hey, that's what Elliott Wave says. In the zigzag pattern, I'm a huge believer in zigzags. We have a potential of going up towards the 435, 436 area for 100% extension on this zigzag pattern. We'll see how that plays out. Taking a look at the bond market. Boy, we talked about this in Tuesday night's TradeFinder. And by the way, if you haven't attended a TradeFinder yet, please do so. We do it every Tuesday night. It's at 9 p.m. Eastern Time. We talk the markets, we look for trade ideas, and we have a live Q&A. It's a lot of fun. We have a great group of people, a great Q&A. Please join us if you haven't already. You can register underneath this video or go to our website at ewotrader.com. And we talked about in TradeFinder the fact that I would like to see interest rates kind of stay in this range. You can see we can go a little bit lower on this wave 5 target. We did bounce off of this support area today, so slightly higher on rates. Interesting that the market finished to the upside nicely today, even though we did have a little bit of a bounce higher in rates. But if we could stay in a trading range right in through this area, means that we don't get interest rates moving out of control, or we don't want interest rates to go so low that we're wondering, all right, what's going on? Why is so much money moving into the bond market? Because you know bonds move in inverse proportions. Prices go up, yields and rates go down. If rates go down too low, especially in an environment when the Fed is raising rates, then you're wondering, okay, are people so concerned with the equities market that they're moving into bonds? So if we kind of stay in this sweet spot area here where, okay, rates are elevated, but not to the point where it's going to really affect growth. So staying in the sweet spot, I think that's a good move. All right, looking at the VIX. We talked about this Tuesday night as well in TradeFinder. We went down to a 50% wave 5 extension, likely area for the VIX to bounce back to the upside and then back down again. Is that wave 5 going to go down to 61.8%, or is the wave 5 done and then the VIX bounces back up to the previous wave 4? I'm curious as to what you think on the VIX. We all know the indicator that the VIX is as far as fear and where the market could go. It is in the lower area, but down around 18 is where we were in the past. 20 has been a bit of support recently, but we've broken that level once again in today's market. So are we going to extend 61.8, or are we going to bounce back to the wave 4 up around 26? What do you think happens first? A bounce higher in the VIX or a move lower? Please leave a comment under the video. I'm really curious to see what you think on the VIX. And then if we take a look at our other markets, looking at the diamonds, you can see that we have this really nice setup on the wave 4 right at a 50% correction. We came down, hit this area of support at 330. It was really important for the Dow to hold 330, moving back down, testing that area, and then bouncing back to the upside. So potential to move back higher there. I really think the S&P is kind of taking control back. Remember when we were talking about, hey, is the Dow the new leader? Is that where we're going to be looking for strength? Well, I think the S&P said, not so fast. We're taking that control back. And then looking at the Qs, we've been talking about how the Qs had performed so poorly that when the market does settle down and start to move back to the upside, the greatest potential gains are going to be found there in the Qs. They were hit hardest on the way down. They're going to have the greatest potential for moves back to the upside, and we held this area here at 260. Last week I asked you, what do you think? Are we going to hold at 280 here? Is that area going to be resistance and turn the Qs back, or are we going to break through it? Well, we got our answer. We broke to the upside today, but if you've been listening to any of my videos over the past several years, you know that one day doesn't mean a thing. We have to have a second day, a follow-through or confirmation day. So Monday is going to be very important with the Qs to see, do we get a follow-through day, another move back to the upside, a higher close on the Qs above that 280 level. We tapped the 10-day moving average on the low and then moved higher. Looking at the Russell, we came back down from that 190 area. It acted a little bit of resistance. We know the trading range has been for, gosh, it seems like forever that we've been talking about this 170 to 190 trading range. We got up near that there on the 18th, and then we moved back down, but we came up. But did we just close this gap, or are we moving back to the upside here and we're going to try to break above 190? I think it would be really constructive for the market here if the IWM could get above 190 and go back into that 190 to 210 trading range that we were in a year ago. That would be a really positive development, I think, and it looks like perhaps the IWM wants to give that a go. You look at the volume, good supportive volume on that move. Not quite enough of a spike to where we'd be concerned. Above average volume, I think you have to pay attention to that. Price to volume, regardless of what your technical indicators are that you enjoy. Maybe you like Elliott Wave as much as I do, or you have another favorite indicator, but price to volume always matters, in my opinion. All right, in the intro, I said we were going to visit Dr. Copper. And hey, you wonder where Dr. Copper got its name? And the reason that it's called Dr. Copper is it's had such a good record over history of forecasting the move in the economy, economic strength, if you will, that is viewed to have a PhD in economics. So that's where it got its name, Dr. Copper. So when you have something like that, I think you want to pay attention to what's going on. And look what's happened. Copper has recently broken above this consolidation that it went through at 375, a little vertical for my taste here on this move. I don't really like that, but we are trying to consolidate in more of a 45-degree angle here, but really a significant move to the upside in copper. And if you go back and look at the history of copper, it goes all the way back to the 14 to 1600s, and then in the 1800s with the development of telephones, etc., telephone lines and all. I mean, it really has a really long history of forecasting economic strength. So paying attention to it now, I think, means a lot. And so if we take a look at this, I thought you might find this chart interesting. This is a ranking of copper to gold. And you can see that the percentage of copper to gold here is in the lower quartile, the lowest quarter percent, if you will. What does that mean? Well, historically, when the copper to gold ratio has been in the lower quartile, it's been really bullish for the markets. In fact, the average return in the markets has been 21% when that occurs. Other times, when we don't have that copper to gold ratio in the lower quartile, we've only had a 5.3% return in the markets. Again, another signal. Call these, green shoots is what they used to talk about on the financial networks as far as things to look for. Hey, maybe we do have something brewing here that we could have some movements to the upside in the market moving forward. Everything is not all doom and gloom as sometimes people think with inflation, recession, etc. And then we look at Bitcoin, and it's had a nice move to the upside. We visited this last night in our insiders meeting. A lot of people talking about Bitcoin getting above 20,000. We had a pretty vertical move there. And, hanging above that 20,000 area after this big run is key. Even a test back to 20,000, I think, is still bullish, but it's got to hold 20,000. And if it does, then perhaps we're moving up towards 24. You may have seen our video on our channel. If you're watching this here, our Elliott Wave Options channel, we did a webinar last week where we were talking about Bitcoin and the halving. Estimates are probably April of next year, and showed some charts that when that occurs, the bottom in Bitcoin has tended to be around 12 months or so prior to the next halving. So Could we have put the bottom in Bitcoin? We really could have. Some stocks of interest, and of course Tesla is always on that list. People are always talking about it on social media, and we've had this nice basing here, the wave 5 moving just past that 61.8% fib level. I think that looking at this chart, at least for the short term, there's a really high likelihood that Tesla moves back up to 160. I think we have to revisit it once it gets there, but I really like this 45-degree angle move. If you've heard any of my recordings, you know I much prefer directional moves in a 45-degree angle because the corrections are less volatile than they are when you have vertical moves. And why am I picking 160? Because that's where we went vertically down. Vertical moves get retraced. And so I think that we could have a move back to 160 on Tesla, and then we'll revisit it and see what happens from there. Netflix, talk about blowing out earnings. The earnings report on Netflix last night was a definition of a blowout. And we moved to the upside today, over about 8.5%, 26 points. And I think had we not had such a nice move already in Netflix moving into the earnings, we would have had an even bigger move higher. But we're right smack in the middle of this tap box, and now we're getting close to where we're filling this gap right here that goes back to April of last year. So we closed that gap today. Now I think maybe you want to be a little bit careful on Netflix. We'll see where it can go from here. When you have this kind of action, I like to look at the DMI, and wow, you know, if the ADX can turn up and the positive directional indicator turn up and the negative continue to turn down, I want to see another day or two out of that. We could have an extended move here in the wave 5. Now note the wave 4 correction was right at the 38.2% fib level. That tells you should get a 61.8% extension. Well, basically we're there. But sometimes the C wave, or the wave 5 in this case, because it's a 5-wave pattern, will go to the next fib level and have an extended move. So we could have an extended wave 5 here up towards the 100% extension. But again, I want to see how the DMI shapes up in the beginning of next week, because basically right now, Netflix has done everything that the Elliott wave pattern has forecasted to do. To see if it's going to continue and move to the next level, I want to see the confirming indicators tell us that, and I just want a little more out of the DMI, just maybe another day or two to show us. But holy cow, did they smash earnings, and they haven't even gotten into the point with the number of subscribers that they added where they're going after all the shared logins. That's still to come. So, you know, looks pretty good for Netflix. And then Apple. A lot of you have been asking about Apple. We got down to this area. Many people said we would never break 130. We did. We went to that wave 5 target that we had going all the way back into early November of last year. And now we're moving up. Now there is some resistance ahead here at 140. But if Apple could get above 140, you know what happens then. Then we start looking at that 150 level. Again, that was support resistance for so long. It's still support resistance, but we got to get above 140 first. Closing just above that 50-day moving average today. That was key, but I think 140 matters more than the 50-day moving average on Apple. So can this rally in the Qs continue, the tech stocks, and get back above 140? That would be really a positive signal for Apple. So taking a look at some of the international markets, looking at the EWA, boy, if the resources are going to start moving, copper, gold, silver, etc., all looking to have bids, you have to certainly look at some bullishness in the Aussie market. And we went right to the wave 5 at 61%, and as expected, we've consolidated there basically for about a week, but without a significant pullback, which I think is really bullish there. We're allowing the 10-day moving average to catch up. As long as we can stay above this 24 level here on the EWA, I think the likelihood is that we could take off and look to go to the 100% extension there. Now, in this case, the Aussie market, we had a 50% wave 4 correction, so 100% extension is the target. So this is just consolidating the recent move here more than hitting its target. It ran into some resistance at the fib level, but that doesn't mean that that's where the end of the wave 5 goes. I think we have more upside to go there. Looking at Canada with the EWC, a nice move here. Now we are at some resistance here in the EWC right around 35. Looking at the 10-day moving average, tapped the 10-day moving average on the low both yesterday and today. Basically, this is good constructive movement here, and I think we could be getting ready below average. We want to see that come in, but perhaps you would rather see the volume come in when we move above 35. See this spike? This is what you don't want. And see, that's what happened. We had that big spike in volume, and then we just went sideways and consolidated. But if we can break above 35 and bring that volume back in, then I think we have something working here on the EWC as well. And we could move back up into this area up around 37 and then revisit it and see where things go from there. But once again, we'll be looking to see if we get a follow through on Monday. Do we close again above 35 on the EWC? The INDA, in a series of corrections here, we went through a big flat. Now it looks like we're trying to create this big zigzag pattern here to the upside, and that could bring us all the way up to 45 on the INDA. And once again, I like this move. You can see the dotted line here on the C-wave extension is a 45-degree angle, and we probably will have some resistance up here around 43.8 or 44 on that 61.8% extension. But as long as we continue to climb here on this 45-degree angle, we're above the 50-day moving average. We've consolidated there for a week, started to break above it. Same scenario here. Be looking to see if we get follow through on Monday. And the German market, just peppering that wave 5. I'm a little nervous about this vertical nature of this move right here, but so far at least we haven't given much back. We've allowed the 10-day moving average to catch up. Again, consolidation over the past week after a pretty vertical move. So can we continue and move higher from here? Looking at the DMI, it would be suggestive of, yeah, that movement to the upside in the German market isn't over. We're just consolidating and resting here, letting the 10-day moving average catch up, get some more energy built up, and then make our next move to the upside. Really nice to see after nearly 2 years of the German market just being a disaster, if you will, on the move to the downside, to see some positivity there. You all ask about Hong Kong. You know, we've got the reopening of China, etc., and we're at some resistance here, consolidated for basically 2 weeks here on the EWH, right at this 22 level, but once again, broke above it today. Can we follow that through at the beginning of next week? So also here in corrective phases, just, I could draw them all, but there's all kinds of zigzags here. You can see that one there, and then we have there. So we have a complex C wave in this zigzag pattern. I'll go ahead and draw this one for you. And then you can see where we went right to the 100% extension, but then within that C wave, there's another zigzag right there, and that takes you up towards possibly the 23 level for an extension, but good, solid, constructive movement here in these zigzags, and see if we continue this move into the early next week as well. So I think you're seeing the common theme here. The beginning of next week is going to tell us a lot. If we get follow through on this bullishness at the end of the week, I think that that's constructive for the market moving forward. You all ask about the EEM, the emerging markets. Is that a place to go? Well, this is important. We had a 38.2% wave 4 correction, the fib level there at the 38.2. Nice consolidation. We moved higher. Now we've broken above the 61.8% level, and here we go again. We broke above some consolidation here, and that would lead you to believe there's a likelihood that we move to an extended C wave. Again, the DMI is supportive of that, which could lead us up to a 100% extension on the EEM. I think that looks pretty good if you're looking for a place to find some upside. Hope you found this interesting. I look forward to talking to you again soon. Have a great weekend, everybody. Take care. If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.